Welcome, welcome, welcome. Great to be here, guys. I'm excited for today. We have someone very, very special. You might have known that Robert De Niro won an Academy Award for Raging Bull, but I have the true Raging Bull when it comes to oil and gas right here today on the show. Eric Nuttall. Eric, great to have you. Thanks for being on the show.
Good to be with you.
Eric is a senior portfolio manager at Ninepoint. He runs an oil and gas fund. He's also a partner there. You've been there about 5 years, I think. I need to know what made you get into the oil and gas sector, and how did you become the synonymous name for oil and gas bull in Canada over the last, I don't know, 10, 15 years?
Yeah, it's a fair question to ask. Well, I've been doing this since 2003. I joined Sprott Asset Management right out of school, effectively. And at the time, Eric and another fellow by the name of Jean-François Tardif were getting quite bullish on natural gas, and so they needed somebody to help crunch the model. So that's what I started doing that, and then some generalist stocks. We launched an energy fund in 2005 when Eric Sprott started to think that the world was reaching, peak oil supply, which he was early, but he was on the right path, and so I was involved with him launching the Sprott Energy Fund, which became the Ninepoint Energy Fund when we did management buyout from Sprott in 2017. And so I've been involved with it for quite a while. It's been a heck of a journey. We've gone through some great times, some not so great times, the worst bear market in the history of oil and gas for the past while. But I'm sure we'll get into a lot of the reasons why I'm quite bullish on the path going forward.
Yeah, I met you actually. You probably don't remember this, but I met you about 6, 7 years ago. I was on BNN in Toronto. I was there live, and then you were on after me. And I remember saying, "Wow, I guess they got that like take your kid to work day today or something," because like you look like you were like 21, just coming fresh, and back then. So you've always been kind of the fresh face, bullish on oil. Maybe real quick, why are you so bullish on oil right now? And then I do want to get into a whole bunch of questions with you about
Yeah,
ESG
you
and valuation. But why are you so bullish on oil right now?
Yeah, so it's a really simple conversation to have. There's four main reasons. There's demand, and then three areas of supply that really excite me. And so the backdrop is, we know that demand today is higher than where it was pre-COVID-19. So the damage that COVID had on demand patterns has been completely healed. But the real story going forward is all about supply. And I think supply growth is meaningfully challenged. And in that context, then there's a mismatch between supply growth and demand growth, meaning the market will remain undersupplied, forcing the oil price up. I would have said this year, now it's been deferred due to some releases from strategic petroleum reserves to next year. But ultimately, oil has to go high enough to kill discretionary demand. And that occurs at an oil price meaningfully higher than the approximately $95 to $100 where we are today. And so why is supply growth curtailed? When I look at supply, there's three main areas to look at. There's US shale, there's OPEC, and there's the global super majors. Shale companies, they were responsible for the rocky road that we've been stuck on for the past 8 or 9 years. They outgrew demand growth for a period of time as the market was throwing hundreds of billions of dollars at them. And the result was oil meaningful growth in supply overwhelmed the market. The price crashed a couple of times. Fast forward today, there are new shareholders, value investors that say you will not repeat the sins of the past. You will underspend as opposed to outspending their cash flow back then. And given how depressed your share prices are, either buy back shares or pay a variable dividend. And so we're making about 9 to 10% dividend yields right now at the current oil price. And so those shale companies are constrained by their very owners to underspend their cash flow. And so they cannot repeat the same growth rates as in the past. And that's a structural change. Secondly is OPEC. OPEC's been underinvesting for the past 6 years as they've had to satisfy social spending. Otherwise, people can go out into the streets and revolt and demand regime change or worse. And so what we're seeing is the exhaustion of OPEC's spare capacity by about the end of the summertime. Frankly, 3 countries within OPEC have any semblance of spare capacity. Russia, we can probably touch on later. That's an even more bullish impact on the supply imbalance going forward. And then the global super majors, spending by them peaked in 2014 as the oil price crashed. Spending there crashed as well. And what we're seeing now is the oil price is back to where it was, and yet spending's down still by half. And so the ESG conversation, the divestment, the initiative, I don't know what demand's going to look like 5 years from now. So how can I invest $4 billion in a project that's going to take me 10 years to get my money back? I'll just take the path of least resistance. I'll pay a dividend, I'll delever, etc. And so the fear of peak demand is really leading to the reality of peak supply. And so that's what excites me. I think there are structural challenges to supply growth, and yet demand is going to grow for at least the next 10 years. And you and I will both be using oil for the rest of our lifetimes.
So much to unpack there. Let's start with the companies making a structural change. I want to address that real quick because some would argue that it's in the best interest of the shareholders for us to get as much capital as we can back, whether through buybacks or dividend. And you know what? I don't know what's happening in 5, 10, 15 years. Just give me as much as you can for my reserves today, now, for the next 5 years. And like, I'll be happy as a shareholder. You're saying on the stock side, it's very good for the lack of supply, but how do you feel about the company strategy itself? Is it a good call or a bad call on their part?
Yeah, what I am championing in Canada is the moderation of growth, if no growth at all, frankly, because a company that's trading at 1.3 times enterprise value to cash flow and a 40% free cash flow yield cannot justify taking money and using it in drilling a well and growing production when the best use of that excess cash is to buy back their own stock. And so I've been a big champion of companies buying back their own stocks. And the reason for that is been using an analogy that the generalist investor is just stuck in this catatonic state, this coma, and to shake them awake, to make them recognize that we're in a generational opportunity in energy stocks, you need meaningful action. And so I'm not talking like 5% buybacks. I'm trying to get like 20% buybacks. What am I ask of companies? And we run the largest energy fund in Canada. So my average company ownership is about 4.8%. You need 5% for board representation. And so we've got a seat at the table and we're saying, look to guys, like, and it's a very constructive conversation, but it's like, you can't justify growth. And so why bother? You know, all you do is you deplete your inventory, you increase your base decline rates. It's a harder business to run. When you should be buying back 15% of your stock, 20% of your stock, you're achieving 15 to 20% growth on a per share basis. But that's a permanent retirement of those shares. And if you're paying a dividend, well, you're reducing the burden on the company to have to pay that dividend. And hopefully it awakens people up to just how profoundly mispriced your stock is. And so I say to them, well, if you have the ability, the free cash flow to buy back your stock and you're unwilling, then why the heck should I? Like, if you're not even willing to buy your company, when you probably know even better than I do, like, why should I if you're not? And there's not a really informed response that a company can come back to that way.
There's a blockage, right? And I've seen it in not just the oil and gas sector, but I feel like we see this across the entire market where CEOs on the boardroom level, they're just, they can't see with the blinders on. They can't see the strategy of buying your own share, like buying your own shares. You see the balance sheet, you know what's going on. If you can, it's simple. If you could generate more return buying back your stock than you can doing a CapEx or a dividend back to the client, which is, call it 10% cost of capital. If you could do more than that, you should be unequivocally doing that as much as you can, right? Like, that's the math.
Yeah, I think companies do get it. It's taken a while. Like, the conversation started in the US and it took 2 years. It started in the fall of 2019 and it took 2 years to succeed in shifting the mindset from growth for growth's sake to actually generating economic rates of return, minimizing spend, maximizing free cash flow, et cetera. We've been having this conversation for probably a year. Like, we did an open letter that was well publicized. God, it feels like an eternity to go, but that was probably a year and a bit ago. And I think we've been successful with the help of others of helping shape the narrative in Canada, and everybody gets it. And so you're seeing multiple companies buying back 5, 10% or more of their stock. They've got NCIBs coming due in the coming months. They're going to renew them for a further 10%. And so I'm excited because here we've got, oil price wobbles on COVID headlines and whatever, but we just printed $97 WTI for Q1. The loonies remaining low. So the average selling price for Canadian oil companies is near an all-time high. Cost structures are low. So free cash flow is just in abundance. And so Q1, I'm hopeful that you're going to see consistent messaging and action, not just messaging, but action and buybacks, dividend increases. We could see some large caps. I'm expecting like a 300% dividend increase. That action will awaken people to realize just how much free cash flow the sector is gushing with.
I want to take you through a tougher period. I can go back to 08, but I'd rather not. I'd rather go to 2 years ago right now. I'm curious. So the fund is getting hammered. The redemptions I'm getting are probably causing you anguish. Oil goes from $30 to $20 to negative right around April 2020. I'm sitting here, I'm taking pictures of my TV because there's a negative number next to a barrel of oil. So to put that in context, this is tough for people to grasp, but you had to pay someone to accept delivery of your barrel of oil. So you're paying $30 for someone to take your barrel of oil. What were you specifically doing in your office? And I know you're going to say, well, we're looking at the charts and whatever, but like, were you actually able to do anything right then on that specific day and around that week?
Yeah, it was a special time. So I was undergoing a big house reno. I was in a rental apartment, which was undersized relative to my family. We were under COVID lockdowns. Kids were at home, schools were shut down. It was a special time. I have the best client base in the world. I actually was getting zero redemptions and modest inflows at that time. But my fund had fallen to a low of $26 million in March of 2020.
That's
So
crazy.
it's $1.6 billion today. And so my messaging, like I felt like I was a guy in a rowboat in the middle of the ocean, and you just you're out enjoying the day, but then there's this wall, there's a storm coming, and you're too far from shore, like you're screwed basically. There's nothing you can do. You strap yourself in, you got to get through it, and if you make it through to the other side, then my belief then was I'll be the last man standing, and my clients and I will reap all of the spoils. And so we did that, and I tried to be as clear in messaging about the opportunity that I believe, saying, look, we've got companies with hedges, they can make it through. Like it's bad, but it's not like terminal, and we're buying deep value in their stocks that, I think of like a Nuvista, which is a holding now. Like we bought 1 million shares at 26 cents and the stock's $11 today. And so we really were doing our best to take advantage. And I knew, fear paralyzes you. But fear can stand for false evidence that appears real. You're being inundated with negative messaging, and that you're in this negative feedback loop. And my job really is to try to tune out the noise, focus on truly what I think matters, and let that dictate, and do your best. It's tough. We're not robots, but you try to shove down the fear. And Twitter's cool. Like if there's a public record now going back all through it then in terms of exactly what I was thinking, because it's, I was trying to offer guidance and some emotional support through some very dark days back then, and it worked out okay.
It's crazy. A lot of what you're mentioning now is kind of, I mean, I do it on a much different basis, right? Because I work with retail clients, and we don't have 100% exposure to oil and gas. We have 15 or 20 or whatever it may be over Canadian stocks. So it's much less exposure, but I had to do the same thing with clients on March 23rd. I'm like, this is a generational opportunity. Let's be buying. If you have cash, send it my way. We will be deploying all the cash we have in your portfolios now. We're investing. We believe in this. I could see the other side. It looks great. I don't know when the bottom will be, but very, very similar to what you just mentioned here with oil. The difference was that the fund didn't go from whatever it went to 26 million for you. Now, So I guess that, like, I don't know the return number from I know your 1 year number is about 140% or something like that. So would your 2 year number be like, what is it, a 4X or something like that, or a 5X?
I couldn't even tell you. I focus on year to date because frankly, memories are, you're a hero 1 year and a zero the next. So every year the calendar gets reset, the scorecard gets reset. I have clients up 12, 13, 1400% in some cases, but my goal today is how do I maximize returns today? Scorecard set at zero. Where do I make my next, multi-bagger or 100% opportunity? It's great to look at historicals, but that's really where my focus is.
I remember when the cannabis bubble hit, and like everyone was buying cannabis. And I remember going on BNN and saying, like, I feel like I'm taking crazy pills, because like the valuations right now, they just don't make sense. If I look at multiples of what the market should be, and like, am I the only person who, I felt like screaming at the sky, be like, did you feel that way at the bottom? You felt like you were the only one that was kind of seeing this, and like, am I taking crazy pills?
I did. Now, I would also say a lot of my beliefs were based upon forecasts as opposed to reality, which is very different from today. And so I mentioned like that one stock that I bought, 1 million shares at a 26, 27 cents. I just bought another 1 million shares at like 10.50 a couple of weeks ago. And, it's
Averaging
actually cheaper. Well, it's actually cheaper today than what I paid back then. Okay. But was the risk less then or now? Like now I can say, okay, using an oil price lower than where we trade, using like reality and not a forecast. And it was a very aggressive bullish forecast, and we were proved to be correct, but there was risk in that. Today, my risk is I'm using where I think we are now, discounting it, and I'm paying a cheaper multiple than I did back then. And so, what I decided, I'm proud of what we accomplished, but I'm most focused upon now where I look at my models, like at my spreadsheets. We model out most companies in North America. And, we've got money coming in every day, $1 million come in or whatever today. So where do I want to spend it? and I'm buying companies trading at 1.4, 1.5 times enterprise value cash flow, trading at 30, 35% free cash flow yields, where they're going to be net cash, debt free by the end of this year. They're sitting on 20 years of drilling inventory, and they can pay me a 35% dividend yield, and yet they could retire all of their debt and buy back all of their shares outstanding with 2 or 3 years of free cash flow. So I'm effectively getting 17 years of a potential 35% dividend literally for free. And so this is when I say, like, what am I missing? Like, surely other people are seeing this, but they're not, because in terms of guys in my seats, like, there's no one left. It's me and one other entity in Canada, because it's been a game of survivor, and everyone's gone. Like, they converted to ESG funds, they became mining funds. They just said, I don't want to do this with my life anymore. Like, we're out. So, in my mind, that's the opportunity, because it's so misunderstood. The average guy is going to say, oh, geez, we're driving electric cars in 3 years. It's a sunset industry. How can I buy an energy stock? They're dirty, all of that noise. And it prevents them from seeing a very, very, very clear opportunity if they just spent the 5 or 10 minutes looking at it.
I'm going to ask you about ESG in a sec, but first I want to go back to those dark days, because we do have like super fans here in the office. My dad's been a raging oil bull for a while. He made a ton of money, trading oil and gas stocks. Derek here, one of my right-hand men, he's a big Eric Nuttall fan. But I remember some days we were looking at you on BNN, and like, you look like you got gray hair overnight, and it's like, you've been wrong now for a while. Did you ever were you ever close to throwing in the towel? Did you ever come close to capitulating? Did your friends and family ever have an intervention and be like, Eric, come on, man, enough's enough. You got to throw in the towel?
No, never. I'm a simple guy. I'm driven by logic and math. And so,
right
and you try your best. Again, we're not robots, but I had enough training and experience, and I've had some great mentors. Like, Eric Sprott was a great mentor, and I saw him go through some very, very dark times when, the market was against him, and we were down hard on the mat. And he stuck to his analysis, he stuck to logic, and he fought his way back, and he did phenomenally well. So I've had that good experience working with him, and then relating it to myself to know I just have to make it through. All I have to do is, my clients need to stand with me. If I lose my clients, I'm done. And I believed in my soul that this was like the greatest opportunity ever, but you got to make it through. It's that storm. You got to get it through to the other side, and it's going to be choppy. And so my clients stuck with me. I didn't have to worry about redemptions. I had little dribbles coming in that I could allocate, but it was really shuffling the money around that I had to maximize upside capture if we were right on our call. So I know some guys on Twitter were joking, oh, we hope Nuttall like throws in the towel because that'd be the greatest sign ever. But no, we were never close.
Well, I was going to say, if ever you do capitulate, I'm loading up. I am loading up.
Yeah.
Again, guys, I'm here with Eric Nuttall. Eric, I want to ask you about ESG. We've had a lot of talk about ESG. You've mentioned it. The prevailing sentiment among retail investors is that, oil and gas is a sunset industry, much like Yellow Pages and much like, I don't know, direct mail, and much like, why the heck would I want to own one of these stocks? And so a bunch of questions. You already answered part of it, which you said, you know what, I'm getting 17 years of cash flow dividend, 35%. Plus, if oil prices go up, it's better than that. Maybe talk real quick about what EV would actually do to oil and gas demand, because people don't get that.
Sure.
What would electric vehicles do to the total global total global demand?
So if all of us were driving electric cars tomorrow, demand would fall by 27% globally. So 27% of the 102-ish million barrel per day market is electric cars. And will we all be driving electric cars tomorrow? No, very clearly. There's 1.35 billion internal combustion engines to displace. That will likely occur over time. EV sales last year were 5 million, and that 5 million is scaling. But to replace 1.35 billion, how many years of a scaling 5 million does it take? And at the same time, there are major constraints to EV adoption. Like, I've got a Goldman report talking about, copper shortages. RBC is talking about, 30% plus copper deficit by the end of this year. Well, that's moderately important when we have to increase electrification capacity all around the world so the cars can charge. California, there was a story over the weekend that the government was asking people, please don't charge your car because we're short power. Well, that doesn't really work. The US has to double the amount of power generation capabilities for everybody to drive an electric car. And you need things like copper. You need base metals that go into the batteries and such. And so if we just assume that we go there, my best guess is you're looking at 15 to 20 years before that rate of new car sales of EVs makes a meaningful dent in the install base, because that install base grows every single year. The 1.35 billion, the number is getting bigger every single year with population growth. And so people don't realize that 60% of demand is transportation, 40% is not. Well, how do you shrink? That's like 40 million barrels per day base. That's growing because the world's population is growing, living standards are growing. You and I consume 20 barrels of oil a year, and people in the Middle East, Africa consume 5, and that's where all the population growth is occurring. So what I would say is only the mathematically challenged, spending time on the matter, would say that demand is not going to grow for at least 10 years, at which point it's only a very slow moderation. And yet that fear of peak demand is leading to the reality of peak supply, because companies are no longer willing to invest today. And so that's having an impact today on a concern in terms of what's going to happen 10, 15 years from now.
Do you have a comment to be made about ESG portfolios and individuals who are now, wondering, did I make the right call here? Because I'm lagging a ton this year in the Canadian market, and like in the last 12 months, I mean, I have no minerals mining, I have no oil and gas, and I have no, other sectors that are outperforming. Do you have a comment towards that?
My base belief was always you can be as woke as you want to until your job is on the line, because ultimately people hire you and I to make money for them and to perform. And when I look at the opportunities in oil, and let's talk about Canadian oil, let's talk about ESG, because people would say, oh, the tar sands. There was an article in the Financial Times about those nasty banks lending to those tar sand companies. We produce one of the cleanest barrels of oil of anywhere on the planet. We all own a pipeline expansion called TMX. We just spent $50 million to move 150 anthills, 150 frogs, and they've removed rare moss. Literally, it was in supposed harm's way, and they're storing it, and then they're going to install this moss back, when it's safe. Identify another jurisdiction on the planet that has the environmental stewardship that would dare spend money on those types of things, where our oil and gas sector is the largest investor in clean technologies of any other sector in Canada, and our oil sands have pledged net zero with the government's help that just got announced in the budget last week to reach net zero by 2050. And so the demand for oil will grow. The question is, who do you want to provide it? Do you want it to be Canada, where we've got the highest ESG rated in the barrel? Or do you want to be Russia, that's sending cruise missiles and killing innocent kids and raping women and running them over with tanks? That's your choice, because the demand for oil is going to grow for the foreseeable future. And even when it moderates, the barrels have to come from somewhere. So who do you want to provide it?
What about the argument that you're enabling, by buying oil and gas stocks, you're enabling the continuation of, the slowdown of the adoption of EV and whatever else, electric planes and whatever? Sure.
So there are natural guardrails to the speed of adoption of hydrogen, of renewable jet fuel, of EVs, etc. And I've said there's well-intentioned government policy, politicians that truly do what they think are best for the planet. And then you've got our energy reality. And there is a massive, massive chasm between those two things. And ultimately, policy has to live with our realities, such as copper deficits, nickel deficits, hyperinflation and input costs of solar farms, the need to double our power grid. Meanwhile, they want to completely decarbonize it. All of these things that, even if everybody divested out of oil stocks tomorrow, it's those realities that moderate the speed of adoption in alternatives. And again, I go back to, there's 40% of oil that's non-transportation. And the only way for that not to grow is for you and I to tell those people in the Middle East and Africa, you cannot have what we have. You cannot enjoy the standard of living that we have, because we've got to, cut in global emissions and such. I don't think that's a conversation that will resonate terribly well.
Right. What about the argument that, oil is dirty today, but over time we might develop technology to, carbon capture and whatever, and to make it less dirty or clean. Do you believe in that? Do you subscribe to that theory?
Well, so when we talk about dirty, now we're talking about CO2. So CO2 emissions intensity has fallen roughly by 25% over the past 15 years. The heavy lifting's been done. Frankly, a lot of it's been using steam more efficiently, being able to transport it so you don't have to burn as much natural gas to create steam to make the oil more mobile. A lot of people think about, the big open pits, but most oil sands today, and especially going forward, is in situ. So the less steam you can use, There's other things to use like propanes and solvents to make it mobile and not have to use natural gas, but those are kind of on the come. The easiest is on a phase 3 basis. Oil sands will never be net zero. You've got to capture other carbon to offset it, is the understanding right now. And so the federal government just said, roughly speaking, they'll pay for about half by 2030. It's likely some of the provinces are going to kick in some more. And I think the oil sand companies are playing ball as well. So here, the potential, I wrote a column in the Financial Post a year ago or something on this. And it basically, we already produce the most ethical barrel. Outside of emissions, we already produce one of the cleanest barrel. We do the frogs and the Nuttalls and all that stuff. And now we have the potential to produce a net zero barrel of oil. And so when you have the marriage of all of those things, I don't know how anybody can look at our sector and say that it's not ESG friendly. I do not get it.
I want to ask you about your fund because I own it personally. My kids own it in their RESP. Some of our clients own it as well. It's for the right client. It makes a ton of sense. But what would you say to someone who would say, why don't I just look at his top holdings? I could pull it up online and I could see that it's ARC and Baytex and Cenovus and Crescent Point and Enerplus and Mega Energy. And why wouldn't I just buy those names? And, I could do this on my own.
Yeah. Well, the buying decision is the important one, but the more difficult decision is the selling, knowing when you think the reward no longer compensates for the risk that you're taking on. And given that stocks are moving in real time, what we do is we're always rebalancing the fund to be in those positions that we feel most strongly about. Ideally, we can identify a catalyst. We've got Q1 reports coming up. We think there's going to be some meaningful catalysts embedded in them, and so we can increase weightings heading into that. Maybe that's a catalyst to reduce weightings if the stock re-rates. And so it's really having the ability to concentrate your power on those names that you see most upside relative to the risk. And then there are times when, we've got Shanghai under lockdown, right? Oil's down $4 right now, stocks are down 4%, etc. Will you have the emotional fortitude to be able to resist selling out of panic and fear versus just you're handing that responsibility over to a guy who's the best in the world, literally last year, as it was in 2019 for conventional energy funds. So there are incremental benefits as opposed to going to the website and buying the top 10 every month. There's a lot more at it, and we think the value add that we bring to the table easily justifies that, as opposed to trying to do it yourself.
Humans have shown that they're not able to do this on a pure stock basis, right? They don't have the emotional fortitude and the intestinal fortitude to make the sells and the buys at the right time. They can't do it, right? Forget it in oil and gas sector where it's like the betas double or triple or whatever the heck it is, and you get swings of 80% in specific stocks. I will tell you this: unless you're a superhero, don't try to do this on your own. And either you've proven that you could do it. There's one other fund out there as well that does a great job. You talked about how clean energy, relative clean energy is in Canada. I want to ask you one last question. I know we're short on time here. What does Eric want to do in his life? You're a young guy still. You've built a $1.6 billion fund, and there will be another oil cycle. I guarantee you, Eric, where it's going to be down 50 or 60 or 70%. One, how are you going to handle that again? And two, what do you want to do long term?
Yeah, so I think we're in a multi-year bull market for oil that will lead to stocks increasing meaningfully from here. When I can look at stocks trading, using the current oil price at 1/4 to 1/5 of their historical norms. And so my focus is really on maximizing upside capture and making money for my clients now, as opposed to looking, longer term. I enjoy being an advocate for a sector that, it's like the nerdy little kid in the schoolyard that gets punched all the time, even though the oil and gas sector, at one point was 15% of our Canadian economy. And I think about my kids that are inheriting, I don't know how many tens of thousands of dollars of debt from the spending that we've had over the past several years. And the only way for them not to have to shoulder that burden is for the Canadian economy to fire on all cylinders. And so the vilification of a sector that produces a commodity that affords our standard of living that we enjoy and take for granted, frankly, every single day, somebody's got to speak up and identify the opportunity in that. And so that's my focus. 10 years, 15, 20 years, like I'm 42, I think I've got my runway ahead of me is long. I enjoy what I do. 2020 was soul sucking, but generally speaking, this is a fun business. It keeps you on your toes. You've got to learn and grow every single day. You've got to be better because you've always got competition. And if you're slacking off, they're not, and they'll eat your lunch. So it's always, you've got a fire under your behind to be better every single day, make sure you're not missing anything. And so I enjoy the constant daily challenge of that.
2020 was tough. That's an understatement, because I know how hard it was for me in my seat dealing with retail, but like you were dealing with like negative oil prices and not knowing if you'd have a job the next day. Congrats. Good for you for making that work. Good for you for building a $1.6 billion fund. Thank you so much for taking the time, Eric. I do want to respect your time. Once again, Eric runs the Ninepoint Energy Income Fund. You could buy it directly through FundServe. You could also ask your advisor about it. The fund is up 140%, trailing 12, and I think it's up about 10 times since the bottom. Eric's done a phenomenal job of running an oil and gas fund. Thank you so much for taking the time, Eric. Wish you the best.
You bet. Happy to be with you.
Thanks.